Righto. Well, what we've got today, it's a special little company. It's got two growth projects. They'll be in cash flow. One's in cash flow now, positive cash flow, and one will be starting up at the end of December, January next year. Gold, very high grade gold, 30 grams per tonne in situ, and rock phosphate in Brazil. This is all crap, so don't worry about that. The market capitalisation is about 68 million. That's not a bad price, but you know, I'm not going to be happy till it's $1 billion, and I'll tell you why it's going there. There's a share price chart. You can look at that on your screens. The most important things there are the takeover bid. You see, we closed that about July last year. That was how we acquired the Colombian gold and copper assets. Unfortunately, there's a few people, when we did the takeover bid, we put a 6-month escrow on the takeover shares and they started coming out. You can see that. We've started recovering now. You know, if you're a chartist, you can see there's an uptrend there somewhere. So we've got very high gold, high grade gold. Now, Colombia, if you mention Colombia to people, they either think of Pablo Escobar or they've been there and they say, wow, that's a fantastic country. It is, fantastic gold resources, and there's some big companies there. We're only a little company, but we will get bigger. I won't go through every slide and make it boring. You can look at that at your leisure. But what I want to talk about is the mine itself. That's where we're making the money. Colombia is very mountainous, but this mine, that road there you see along the bottom, that's probably about an altitude of 20 metres. From that road to the actual treatment plant, it's 170 metres, so no logistical problems there at all. And it's a mountain, but not a huge mountain. From a plan view, the Santa Barbara adit is where we're taking ore out of now. We're opening up the Mariana mine. It's a new portal. That's going to go in there and join up with the Santa Barbara underground. We've got the processing plant here. Now, that's a diagram of underground development. And you see a sub-level there. There's about 300 metres of underground development there. The sub-level development accesses the high grade ore. When I say the grade's about 30 grams per tonne, that's what you sample underground. By the time you mine it, it's normal for an underground mine to have 20-25% dilution. So we've factored that into our figures. So the head grade to the mill is going to be about 24 grams. Now, when we bought this, it had already treated 500 tonnes of ore and recovered 20 grams. It had never been drilled. Instead, they found the adit, they drove along that, and we haven't got a reserve or a resource, but we've got about 300-400 metres of underground development. The stock exchange has got us flying under the radar a little bit. We're not allowed to call it a mine, we're allowed to call it a project. We're not allowed to say we're putting the ore through the mill, we say we're putting through mineralisation. But they've got a bit of a problem right now because we're pouring gold, we're selling gold, and you ask the exchange, well, where do you think that gold came from if it wasn't a mine? And they've backed themselves into a corner and they realise that and they don't know what to do. It's what happens when you've got a very inexperienced regulator there. So there's some evidence from the mine itself. That's the main adit entrance. We take the ore in and out through these carts. They can hold quite a few tonnes each. That's powered by an electric locomotive. There's some mining at the ore face. That's the size of the ore body on the left there. It can go down to 10 centimetres, it can be 50 centimetres. The gold in that vein, it's not coarse, it's not nuggety, you can't see it. And that's very important for security. A lot of mines, if you can see the gold, people will nick it before it even gets to the plant. We don't suffer that problem. You've got to put it through the cyanidation to recover the gold. That's just a bogger. That saves a lot of work for individuals. Mechanical mining rather than, shovel and spade. There's a guy just wiring up the face. When we bought it, there was a 30 tonne per day rated treatment plant. It wasn't really 30 tonnes per day, but that's what we were told it was. We recommissioned that in December. Our first gold pour in a precipitate form was at the end of January. The process from the end of December up until this week, last week, it's been a process of recommissioning. We've gone from the 30 tonne per day nameplate capacity, we've actually lifted it to 50 tonnes per day. At that level, we'll be making a real lot of money. The only bottleneck we've got at the moment is how much ore we can pull out, how quickly we can pull it out from the mine. And that's a case of continuing underground development. We can do 15 tonnes per day at the moment, and we're just hitting that level. We've had a few issues on productivity of labour. I had to kick a few heads last week, but on the mining scheduling, we should be able to do 15 tonnes per day, which would give us $250,000 a week cash profit. Over the next month or two, we will be going from 15 tonnes per day to 20 to 30, and ultimately within 2 or 3 months we'll be at 50 tonnes per day. And that's got the potential to be delivering $1 cash profit a week. So, very impressive at these levels. Whether we're doing $20 million a year free cash flow or $40 million a year, it'll be somewhere in that range. Obviously, we're going to be optimising it and doing the best we can, but it doesn't happen overnight. It's not like turning the ignition switch on your car and it just goes perfectly. It takes a lot of time and effort. Scheduling underground is very important. We've just arranged to get a new mine manager. The first guy, he was good at getting it going, but you're at that stage now where you need really efficient underground mining, good contractors, good drillers. So we're bringing in some gun drillers in over the next week or two to make sure we can keep expanding the way I've described. But what I was saying, $20, $40 million a year, well, that'll be impressive, whatever it is. But the big picture, and why I say it's going to be a billion-dollar company, is because of the drilling that we're doing now. If you're familiar with the Lassonde curve, the best period for share price appreciation is when you're expanding the resource. And then you get to the point where you're doing your studies and reserves and your financing and design of plant, the share price falls. And it keeps falling until you actually start commissioning it. And if you deliver according to your studies, it'll start going up again. We're very different in that we've done all the exploration. Well, we've done the metallurgy, the mining, all the proving of the economics before we've actually drilled it. Now, how big is this resource? We take as our role model the Buritica gold mine, which is actually about 10 million ounces. 10 years ago, it was where we are today, pilot plant, and started drilling. And eventually, ZG Mining came along when the gold price was $1,000 an ounce lower, and they paid $1.4 billion for Continental, and we could very well be in the same position. We've just started drilling. Now, if you've got 300, 400 metres of strike of an ore body, you never find an ore body that's just one level. It's going to go down to 1,000 metres, and there's plenty of examples of that. So we've just started drilling. It's a 25-hole program. At the end of that, I calculate we should have about 100,000 ounces in resources that we can declare. Once we do that, the stock exchange will let us call it a mine. But to show you the leverage, our cash costs are plus or minus 400 US an ounce. You don't get recovered grade to 20, 22 grams. And it's going to be one of the cheapest gold mines in the world in terms of cash costs. Now, if we find 100,000 ounces, you take that cash margin times 100,000 ounces, and you get an uplift in value of 280 million US. We're capped at 68 million now. That is where the real powerhouse for the money comes from. The first hole, I've just had a report today. We've hit a vein that we didn't know existed before. I expected it, but we'll get a lot more. In the long run, what's our grade going to be? How big is it going to be? Buritica has got a grade now of 8 to 10 grams because they're bulking together these additional veins. They started out on one vein like we are, but it grew from that position. And I'd be looking forward to reporting very good news over the next month on this drilling as it comes through. So it's a two-pronged story. Cash flow is great. We've got no debt. So our cash profit will be pretty close to our operating profit. I can't tell you it's going to be 10 years, but I think it's probably going to be 20 at least, because if this goes to 1,000 metres, it's just going to get bigger and better. So we have had a couple of issues as we've been commissioning. We had a drought in the tropics, believe it or not, where it didn't rain for 4 months, and we had constrained operations for 2 months because of the lack of water. So we're about 2 months behind schedule. But we're at the inflection point where it's turning now. And we've established alternative water sources so that we won't suffer from a drought again. That's the plant when we first started. Can I go backwards with this?
Yes, you can.
Yeah. So it's only a small plant. The good thing about being a small plant, if we have any problems, they're small problems. It's not a 1 million tonne per annum plant. At 50 tonnes per day, that's the equivalent of 2.5 trucks. If any equipment breaks down or needs repairing, it's all really easy to manage. It's not as if you've got to order a part and it'll take 3 months. So the only thing that's big about this is the profit margin. So, and the gold price is helping us along tremendously. So I've gone as executive chairman of this. I've been, gold's been my number one interest since the early 80s. I've never seen something as sweet as this. The fact, if we can make $40 million a year profit from 50 tonnes per day on a market capitalisation today of 65, that's not a bad position to be in. Now, in addition to the gold, which we've got this project here called El Dovio. If you look at the copper grades there, 2.2, 5.8, 5.1 with gold grades of 15, 5, 9. This is like the Grusa, the ore body that made Sandfire a $2 billion company. We've got 34 drill holes in this. We've got an adit into it. And once we get back into it, once later this year, that could be a very exciting second string project. It'll be more mechanised, it'll be a bigger mine, it'll cost more to develop, but that's something to look forward to. The other cash flow project we've got is rock phosphate in Brazil. Rio Grande do Sul is the southernmost state of Brazil. It's based on agriculture. At the moment, they're importing all their phosphate from Morocco at great cost. We've got a product which is about 10%, and it's very suitable for the local soils, the local crops. The big thing about phosphate, you've got some big projects in the Northern Territory, Queensland, Western Australia, but you've got to put it on a truck, you've got to put it on a rail, you've got to put it on a ship. The logistics kill these projects. Our product will be sold within a 300 kilometre radius of where the mine is. It's all about logistics. Now, the study that was released in 2023 estimated 25 million capex. By now it'd have to be 30 or 35. We've done it a lot smarter. We've found a local family company that's been operating for 100 years. They've got a big industrial complex, and we're going to be leasing 10% of their facility at a cost of a few dollars a tonne. The total capex to get us up and running, to start with, it's 2 or 3 million, and that's for 100,000 tonnes per annum of the phosphate. Within a year, we'll triple that to 300,000 tonnes per annum, and that will cost all up 5 million to get to that level, whereas previously, if we built a new plant, 30, 35. Now, the other thing is, we're dealing with a local company, established sales force, they want to sell our product. Compare it, if we set up a new operation out in some paddock out at Whoop Whoop, we'd have to develop relationships, we'd have to develop contacts. We'd be a foreigner in a country that maybe doesn't always like foreigners. By dealing with this local company, the family company, we're entrenched in the locals, we've got acceptance straight away, and it just makes so much logical sense. So that should be operating by the end of this year, first sales Q1 next year. The sort of margins you're talking about there, on 100,000 tonnes per annum, $6 to $8 million a year free cash flow on a capex of 2 to 3 million. When we triple that to 300,000 tonnes per annum, it'll be $20, $25 million a year free cash flow on 5 million capex. Economics are quite stunning. Now, this will be a 20, 30, 40, 50 year mine life. Admittedly, it doesn't sit perfectly alongside a gold mine, but what we will do is go to 300, maybe more tonnes per annum. We will spin that off in a separate company, and I reckon we should be able to get 150 to $200 million. And then Aguia itself will be a pure metals play in Colombia. Not far from our phosphate, we've actually got a copper anomaly that's 7 kilometres long, 2 kilometres wide. You've got copper staining continuously over that 7 kilometres strike length. That's something we'd like to do some more work on. We just know it's there. We just have to get a three-dimensional view. We have to do some IP and we have to drill it. But, you know, that's something for the future. So to sum it up, I'm running out of time.
Time, sorry.
Yeah. It's the sweetest, as I said, sweetest project I've seen in terms of grade and profitability. We'll be growing from this level. We're about break even now, but in 2 weeks' time, 4 weeks' time, 6 weeks' time, you're going to see a growing curve. We've currently got an SPP. We want to raise about $3 million at 4 cents. Between now and the close of that SPP, we'll be bringing out some drilling results and there'll be good news flow. But thanks for listening. I don't know if I've got the story across very effectively. If there's questions you want to ask me later. But I think this is a great little company. It's got a great future. Thanks, ladies and gentlemen.
Thank you.